Good evening, all. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Thursday, December 30th, 2021. Can you believe we're going to be at a new year? And let me take a moment out. I want to wish you all a very happy new year. All right? I'm not putting out any updates tomorrow. I'm taking the day off for myself, not going anywhere. I'll be around running my business as usual. Got a brokerage company, people trade and all that. I'll be doing my research, but I'm not publishing anything tomorrow. It's my day, okay? It gives me then a 4-day period, which I like to take, and recharge the batteries. But that doesn't mean I don't want to thank you. I thank you for watching. For those of you that are also paid subscribers, thank you. You've set me to a record. These are the most paid subscribers. We keep growing now. I only got serious about doing my paid subscriptions. It's now about 2.5, 3 years ago. No more than that. And each year, there's just been very nice growth, and the retention is phenomenal. So I'm very, very pleased, and this year I intend on even getting more. We're going to hire people to get us more presence on YouTube and Facebook and all that, so we'll go to the next step. I'm not a beginner at this, but my brokerage has always been my mainstay, and now I'm turning it to research with it in a much bigger way. So both work. As you get older, it's easy on the research. All right. So let me tell you about research and where you're at. Don't try to make something out of nothing the last trading day of the year. Shame on you if you do that. This is where you sit back, grab your wine. Ideally, you had a great year. Your home went up in value just about everywhere in the United States. Your portfolio, if you have a 401k, unless you were invested in ARC, it's a swipe. I have to say it, okay? You might get year-end rally a little bit, but it was 160 at the beginning. It's one of the few big name funds that did poorly this year. And it's not a swipe at her. Next year may be her year. You don't know. The others, phenomenal. It's just been phenomenal all the way through it. When you look at different parts of it, it could be the Facebooks that you look at. It could be the currency plays. I think we're going to have inflation plays. I think the market's not going to run away with inflation. I am not of the camp. I don't know if I'm in a minority or majority. I am not of the camp that inflation's going to run as hot as people think in 2022. I have my reasons. We'll see if I'm right or wrong. By the way, coming from a commodity background, do you have any idea how fast I can change my mind? You can't think as fast as I change it. It's literally like that. But right now, I am not of the arguments. I saw today Bank of America. Was it David Jones? It was somebody. And he's talking more than 3 rate hikes next year. So we're the exact opposite of where that is coming from. And listen to his arguments. I understand what he's saying. I'm not buying into them, but I understand them. And it's great to see the other point of view. Now, when we look at XLF, and remember, I'm going to rotate different things each week now, so you won't get this in a week or so. These will be gone, and I'll have another market I want to bring up. Write me. Tell me the markets you want me to dissect like this as we start off at a week at a time. It involves you, it involves me. It's a lot of fun to do it. I told you with this market, you get a lot of gaps. That seems to be the nature of this market. It likes to leave big gaps. I don't like that. Okay, I prefer to trade for myself charts that don't do that. So if you were to ask me, hey, Ira, is this one of the charts that would be your favorite? A flat no, because of all the gaps. The pros like to fill gaps, and they're not filling it for a reason. Maybe it's because the futures interact with the banking system too much with that. I don't know. But in looking at the chart, you have a pattern of a higher high, lower low. That is not a trend. The market's been staying over the 18 average and the 100, and now today you had a crossover where the 18 got over the 100. So I'll be looking to see if it on Friday or Tuesday, can you take out this high? If you can get up and over that high, then you're putting into play in the chart the Bollinger Band right away. If you don't do that, then the support I'm looking for is at the 38.88 to 83, but it's not in an uptrend. I have a higher high, I have a lower low. So the only thing that can get me interested in this market is taking out today's high for a very fast move from there up another 60 cents or so to the 39.70 zone. when I look at the market, it's overbought. So I have an overbought market with an upside bias out of a trend. That's the way to look at it. In Apple, you have a lower low, higher high. To me, and I walked you through this here. This is where I think the pros came out of the market. I mentioned it to you as it was occurring. And I said, I don't know that they'll do anything right there. You haven't been trending. You're overbought. You have an upside bias. The stock's done very well. Come on, this is one of the great companies of America. And 178.20, still impressive. And that was Apple. Now we come to Disney, another great company. Now there's a change of leadership that's now taking place. The market's in an uptrend, fighting a battle right here to get embedded. Will it be able to push out of the sideways action is going to be the question. It's certainly not near its highs where it was just in October, right? This is a market that was in the 180s. It gave back a chunk since then. So the new leadership's got to figure out a way to get it back up to that number. In your Facebook Meta platforms, the new name for all this, a lot of lawsuits going to face this company this year. I'm not enamored with the chart. You're overbought. You're in resistance areas in an uptrend. If you take out 141.64, you trigger the market like that for a potential move right back. Did I say 141? 341.64. Back down into the 335 to 334 level, about a $6 break very quickly, like that. XLI, too overbought, not trending, just sort of meandering in the upper and lower bands. This is a vertical price rise move. It's every day you make a higher high. Probably not going to happen tomorrow at year end, but you don't know. But that's not what it's been doing. So the market getting a bit extended. I don't think it'll hit that upper Bollinger Band. It acts like it's weakening right now. Be careful right here in your semiconductors. You came up beautifully. I said that. I have made in a statement that I've made out to all my paid subscribers and to you. Said, I don't want to be playing the short side of semiconductors. Why? It's too much pricing power. I believe the Omicron is going to prove to be at the end of the day, with all the record cases, we are setting records in America through the numbers we've ever had in COVID. You realize it. Daily records are just falling. You would think it's a disaster because of the mildness of this. For people that are that have been vaccinated, they have the vaccine in their bloodstream, the situation's not as bad. Now, for those that make it through it, and there'll be plenty that don't. I mean, you're going to see national deaths climb at a real nasty number. For those that make through it, they're going to get the antibodies in them. It helps. But this is not something going away. But if this wave takes over with variants that come out not as severe, that's a good thing. We can't get rid of the fact that we have the virus, but you can't get rid of the flu either, right? I take a flu shot every year, and I'm sure many of you don't. But there's plenty of you that do it just like I do it. It doesn't prevent you from getting the flu. The vaccine doesn't. It helps you with when you get it. You don't get as sick. And to me, that's the important thing. Well, if that's the case, and you would come down on this, which I'd love to see, I think you're going to set up for another buy for the springtime, a big one, where the markets say, where the automakers are getting back there, it's not so bad. People want new cars. They're tired of buying used and driving all over the country to find a used car that they can afford. I think semiconductors are going to stay in high fashion. Cannabis. Well, this has not been the year of cannabis. This has been the year where everybody thought when you got the legalization of cannabis, what an industry that's going to be. Well, it went up in smoke. How do you like that? It went up in smoke. But right there, the market's fighting with itself. When we get over here to the home builders, how could home builders not be doing well? All right? I mean, just think of the logic of it. Interest rates going up, we all know that. But the Fed's not going to do this. They're not going to whomp at the floor and stop the economy. They're going to pump the brakes. They're pumping them now by cutting back on the tapering. Then they'll do maybe a rate hike somewhere down the road when they think it's needed. They're not going to jump 3/4 of a point. If you think so, the world better change to something that makes that happen. Be a gradual 1/4 point increase. Everybody will get nervous. Their job is now to give us a soft landing. If they think inflation is a problem, the head guy, he doesn't have to listen to any of the other voting members, he's been forced to drop the word transitory. I, for 1 minute, don't believe he doesn't think it's still transitory. That's just me. I listen to him talk. Got to read the man sometimes. In the energy sector here, you're just sort of stuck right now. Okay, people are talking that they're going to see $85 to $100 crude oil next year. If the economy's good and the world doesn't have the Omicron situation as bad as at first it was thought it was going to be, they could be dead right. You're ready. Mexico told you they're not giving any more oil after 2023 for export. It's staying at home. Their policy is to get themselves going. And today, if you saw the president, remember, he can't tell the central bank what to do, but he can make it very vocal what he thinks. And he was saying, I think the central bank should pump the economy. He can't call up the phone and tell them to do that. Keep the oil at home, control energy prices, pump the economy. Mexico could be very interesting. Emerging markets. Well, they came alive. And remember, we got down here and I said, watch out. This market's not acting like a market that wants to stay down. You're going to hear talk about emerging markets this year, a lot of it. So maybe this was the washout. It was a terrible year. People that were betting on a number of commodities were not right this year. Emerging markets in a sector was one of them they were very wrong on. Gold is acting better. I mean, it has a whole inflation story. Now, its enemy is the Fed. Because if the Fed does what people think and they're going to keep raising interest rates, you're not going anywhere in gold under that environment. You'd have to have such runaway inflation that I can't imagine it, the type that you had many decades ago. That's not what this market's made up of right now. I'm already hearing some of the big firms coming out saying $1,600. Okay, I'm not reading anybody saying we're going up to $2,500 gold. I haven't read one report that says for this year you're getting anything like that, but I am hearing the bear stories. Yet the trend is up right now. In the miners, I like the miners for next year. I think that if the economies of the world can get past Omicron, they all want to expand, and that's what will happen. I know you're going to say, well, but if they're raising interest rates, we're the ones that want to raise interest rates. The European Central Bank doesn't want to raise interest rates. There's a number of other economies that don't want to. Inflation will dictate the terms. Copper, if the world's going to do good with building, construction, industry, this is a market you want to look at, but not here. You don't have a trend. You got up to the 200-day average, very close to the upper Bollinger Band. Say goodbye to your position. So long. Loved you this year. Loved you. TLT in a downtrend. And the futures, if you look, they're all in downtrends. Not embedded, too oversold. You hit the Bollinger Band yesterday. What do you do when you hit a Bollinger Band? Go on my website, www.iraepstein.com. Take a look at the education section. Get your master's degree. It's inexpensive in how to work with that. And last, in the euro, what did I say as you got this action? I said that is the dream that you look for. This is either a base or a top of significance. We wait for the market to tell us which one and away you go with it. I want to be your guy in the morning. Yeah, first thing. At 9 o'clock in the morning, I typically, right in there to 9:10, I start recording a 15-minute to 17-minute long video on average. I'm going to cover for you 40 charts at a time. I will rotate those charts. I invite you to tell me which ones you want me to cover in them, and I will do it. On Saturdays, I use that same format, but I'm covering every chart from the longer term, looking at weekly. You heard me. Weekly charts only. These are some of the markets that we cover. There's 40 of them. How much does it cost for this? To get specific chart analysis, the reasons why to buy or sell, laid out in video for you, in depth. $8.95 for 24 videos every 30 days. I think you can afford it. Make it a New Year's resolution. Spend the $8.95. See if you like it. I'm Ira Epstein. You can always go to our website under research. It's all there. Education to take the courses. You have a great New Year, folks. I'll see you over the weekend with our weekend edition of this Nothing on Friday.